In this Forex class, I'm going to discuss how to use our trading zones to improve your trading. The trading zones can be added to your chart by right-clicking on the chart, Chart Settings, and then go to Add Script. Scroll down near the bottom to Trading Zones. And for most people, you want to add it just as the default add script. This looks at 85% of each currency's average daily range. In other words, if a currency goes up 100 pips a day on average, we'll start showing major support resistance 85 pips up, 85 pips down. This also displays my Fibonacci retracement areas, which, as you can see on this chart, show up as light gray areas. The exact fib area is in the exact middle of this little zone. But fibs, generally come within a few pips of it, or they overshoot it by a few pips, so I add padding above and below that, and it also makes it easier to spot on your chart. These act as support resistance. If it's above price, it acts as resistance, there's selling there, and if it's below price, it acts as support, and there's buying there. The other ones that show up on your chart are dark gray levels, which are called Fibonacci profit target levels. In other words, last night I probably looked at this last move up from here maybe to here, and I may not have thought the first fib level was going to act as support, but I knew that the second one would. And so therefore, this is the Fibonacci profit target level I did last night, and it shows up on your chart without you even having to do anything. And one of the additions I've done that's improved my accuracy is I'm looking at the statistical daily range of the pound dollar. And maybe this is where the average daily high is, up here. So this one was maybe a little bit too close, and therefore I didn't draw that one on the chart. I want to put zones on the chart that if they get hit, you have a good chance of it being the maximum high or minimum low of the day. So here's how you would trade with this. This price opens up, and it's got a major resistance above it. It's also got the previous week's high here. We have a narrow range pattern. And so it's not able to get above this level, so when it breaks down underneath the hourly, you look for a sell, you look for a sell, and when it goes back up to the hourly, and you can see the daily trends up, the weekly trends up, when the weakness goes away and it sits sideways here for a while, you buy this breakout here, and you expect that either the previous day's high, previous week's high, or the Fibonacci retracement level is going to be resistance. But when that gets broken through, we have two other areas of resistance up here, which are the next level where the market could go to. If you bought this breakout here at 54.85 and it shot through all these initial resistance sell areas, your next profit target's all the way up here between 38 and 44. So it's got a good distance to travel. Looking at the pound dollar on a 6 pips per bar chart, I'll add this indicator on here so you can see, because I don't have it on here by default. Go down to trading zones, and you can see it goes to our website, gets the data, and it shows up on the chart. And again, if it's above price, it acts as resistance. If it's below price, it acts as support. There's usually buying at support, selling at resistance. And one thing you'll also find is the Fibonacci profit target levels, if they're above our 2.0 white containment bands, which most of the time contain price, they're very high probability, the end of the move. It doesn't mean the price won't shoot through it, but typically it'll come up to it, maybe pull back, come up to it again, there'll be some selling there, and then maybe the third time it reaches it, or if it goes sideways like this and breaks out, it's going to go through it. But clearly they're selling here in the pound dollar. Here's the euro yen. As you can see, it's above the upper containment band. This is a Fibonacci retracement level. The daily and weekly trend are up, but as you know that the euro yen was weak for 2 days before that, and actually for the last couple of weeks. So this is a major area, and because the retracement level is above the upper containment band, it's very likely to be a resistance area. It's a pretty high probability place to do a counter trend trade, and most of the time counter trend trades will retrace back up or back down to the hourly moving average. So this is your profit target down here at 85. You might have waited for the bar to turn red here at 22, and you got about 35 pip profit while risking 10 pips. And once it retraces and you don't get a bounce off the hourly, which typically happens, and this was in our blog video today, you also want to sell here and get out at the lower rate level. Part of the trading zones also shows green levels of very strong support and red levels of strong resistance at 85% of this currency's average daily range. So this did not show up initially in the day, but once the price went up, we project the average daily range from the highest high and lowest low of the day. So this got yanked up, and this is also a very high probability support area. If you see a trading zone pop up later in the day, it's very high probability, likely to be the maximum low, and you might have bought this little breakout here for another 20 pips. None of these levels got hit, but as you can see later in the day when the price went up and made a higher high, our trading zone level did show up here. If we were to fall to this would be an area that would be major support. Earlier today, if it had continued down, this would have been a major support area. Notice the high today, one of the Fibonacci retracement levels I did last night. So as you can see, I'm pretty good at doing Fibonacci analysis work. I spend 30 to 40 minutes each night, mostly for my own trading, but I put it in the software so our traders can benefit from it as well. And again, when these areas are at and above the upper white bands or below the lower white bands, they tend to act as major support. So this one came up, they were selling, selling, selling. And any time also that you have a daily or weekly or monthly high or low, or weekly and monthly pivot level as this is, or 10, 20, 50, or 200-day moving average right near these levels, they act as even stronger areas of support resistance. Here's the dollar CAD. And another benefit of using these is that not only do they tell you likely support resistance, here you can see it was resistance when it broke through there. There was another one just right here. So in some cases it can have you not take any trades because it's not likely to explode through that level and you can avoid a loss. When you see a currency chopping around like this, you want to avoid it. Here in the CAD yen, you can see my Fibonacci retracement level acted as support. It wasn't able to get underneath that, and if it comes down and double bottoms there with less weakness than it had before and it can't go through it, when it breaks out again, this is a dead time to trade during the day, but if it was a more active time, you'd be wanting to buy here, especially at double bottoms. This one, none of the fib areas got hit, but you can see our trading zones. And the market started off, went up, came down, trading zones showed up here, and when it later on got to this level, this was a major support resistance level, and then the market had a trouble, really going through it. This is, most likely, most days, the maximum high of the day. Same here, trading zones, nailed the high. Here's a Fibonacci retracement level, which, when the market's underneath it, there's likely to be some selling. When it's underneath there, when it's underneath there, there's likely to be some selling. If the price is above there and comes down, there's likely to be some buying. And you can see my Fibonacci profit target nailed the high pretty much to the pip because my level is in the middle of each of these areas. So my level was 85, and it really went about a pip or two above there. This is an excellent counter trend trade because it came up to my level, pulled back, came up again with half the strength it had before, and you have a nice little beautiful 30 pip counter trend trade here, which, by the way, one of our Elliott two-wave fib systems, whenever you have a nice pullback like this, usually after the second wave you want to look to buy between the first and second fib target, and you can see it went up. It only went up about 13 pips, but this is a good example of our Elliott two-wave fib target as well. And last but not least, the New Zealand yen, which acted as support last night. This level would have showed up there last night. At midnight it redraws, acted as support. The market never went through it.